Okay, I'd like to remind everybody again of our texting technology that we have for questions. We're going to start our innovation panel. Again, it's 22333 EB Innovate space and then your question. We are definitely going to leave opportunity for you to ask questions to this group that we have assembled in front of you today. So please use that technology, and we'll keep track of those questions. So to continue with the theme of innovative connections, we will now have our innovation panel. At Eide Bailly, we just celebrated our 100-year anniversary. I'm sure there's been a lot of innovation during those 100 years. In order to stay relevant, we knew that we had to look at our industry through a different lens than we have in the past. About 1 year ago, the firm made the first move. We promoted one of our best and our most productive partners to the role of Chief Innovation Officer, Ross Manson. Ross helps us to foster a culture of innovation, finding ways for the firm to remain relevant in the dramatically changing business world. He builds a culture of innovation through our people, our services, industries, and our offices. Ross helps the firm analyze how innovation can benefit internal processes, products, and services, and the client experience. When you work with Ross, you'll find an energetic partner who brings both diversity to every process and the situation. He's excited about the future, about how Eide Bailly and our clients can thrive. Please help me welcome Ross Manson.
Well, hello everyone, and I am really excited to be here. As Gary indicated, Eide Bailly went down this path, and I joke with people that it took 100 years to create the Chief Innovation Officer. And I find myself here on stage for the first time at the 38th Annual Bankers Seminar. So I'm going to call that 62 years of progress in 364 days. I'm going to keep that ball of momentum going here into the future as well, too. I want to introduce our panel today. I'm going to do an introduction of the panel, and then I'm going to circle back and just talk about these first 364 days from an innovation perspective to give you some examples of what we've done at Eide Bailly here that maybe can help foster the innovation spirit within your organization as well, too. But I'm excited to have a conversation with our panelists. And the first one, Ron Quaranta, who you've already met. As indicated earlier, Ron possesses more than 27 years of experience in the financial services and technology industries. He currently serves as the chairman of the Wall Street Blockchain Alliance, the leading nonprofit trade association promoting the comprehensive adoption of blockchain technology and crypto assets across global markets. He's got other stuff on here, but we've already talked about that earlier. So, second one, Eric Hardmeyer. Eric is the current president and CEO of the Bank of North Dakota. Eric is a Mott, North Dakota native and a graduate of the University of North Dakota and the University of Mary. He joined the Bank of North Dakota in 1985 as a loan officer, and in 2001 he was named the president and CEO. And our third panelist is John Waupsh. John leads the team that architects the company's ever-evolving product offerings. Innovations under John's leadership have earned Kasasa 4 Finovate Best in Show titles, recognition in Fast Company's 10 Most Innovative Companies in Finance, and standing in the FinTech Top 100. From 2012 to 2015, John held the title of Chief Creative Officer, during which time Kasasa's national marketing campaigns received 3 Platinum and 6 Gold Markham Awards. His first book was Bankruption, How Community Banking Can Survive FinTech, which we'll talk about when we get to the panel. Was published in the winter of 2006, and he received his BA in Marketing Communications from Columbia and Chicago. So help me welcome the panel. So, I wanted to just take a few minutes to talk about innovation and what we've done from an Eide Bailly perspective. And you can't start any innovation speech without talking about some great innovation quotes. And you have to quote the first one of Steve Jobs, probably one of the best innovators in US history. And I think it's very poignant in regards to what Steve said, that innovation is the ability to see change as an opportunity. And that's really what we have seen it from an Eide Bailly perspective, is not as a threat. We need to embrace the digital disruption, the disintermediation that is occurring out in our landscape, in our industry, but also to understand it so that we can help our clients in their industries as well too. And the second one really is there's a word in the second phrase that really hit home with us, and then we talk about often now within Eide Bailly. It's, if you don't like change, you will like irrelevance even less. And the key word there that we talk about a lot about is relevancy. How do we remain relevant from a client perspective? And I think that's a question that every organization can take back to their company and start to talk about. How are we remaining relevant in today's marketplace with the disruption, the disintermediation, and it's across all industries. And you need to apply those principles within your organization, but also understand it so that you can work with your customers as well too. So the first thing that I will mention to you is that innovation is absolutely a discipline. It doesn't just happen overnight. It doesn't happen because the CEO of an organization talks about innovation for the first time. There's a discipline to it. There's an approach to it. And you have to inject it into your organization if you're going to create a culture of innovation. And how this got started, 364 days ago, as I mentioned, started a little bit earlier than that. Dave Stendy, our CEO, saw this trend, saw these on the horizon, and said, we need somebody to help us create that culture of innovation. So he walked into my office with the job description, and that was the first bullet on it, was create a culture of innovation. And so we talked at length about what a culture of innovation was. And you know what the second bullet was? The rest of the page of paper was a blank sheet of paper. That was it on the job description. So I wrote down on the second bullet is that, okay, no more ties and white-soled shoes for the rest of my career at Eide Bailly. And you should give white-soled shoes a try. They're very, very comfortable, especially when you're going to stand for an hour. But that was really it. Creating a culture of innovation requires a discipline, what we've learned, and so you start with creating awareness in your organization. Start by introducing new thought leaders into your organization. Read new articles. Approach different seminars and conferences that you maybe haven't looked at in the past, and you'll find that that will lead to greater intelligence in your organization, greater inspiration and creativity, and it's going to drive some solutions that you can deliver on in the future. So what's needed? I wanted to mention 3 things that we've built out this first year. Is you need to have a platform. And what I mean by a platform perspective is you want to be able to crowdsource ideas. You hear about crowdfunding, but crowdsource ideation within your organization. Give people an opportunity to generate ideas without them getting squashed by their direct reports, which happens all too often in organizations. The second is provide a framework. Give people an idea. You don't just walk into a meeting room, and say, let's innovate today. How do we do it? How does it look? How does it feel? Those type of things. And then the final one from a 3-pronged approach is you got to put some management behind it. And then understand your challenges. And we'll talk about that from a panel perspective. A couple more slides before I pose the first question to the panel. They're in the hot seat right now. So, Innovation Idea Platform. This is what we created at Eide Bailly. It's called Idea Hub. It's off of a platform or a solution called Soapbox. To date, we have had 990 ideas submitted across our organization. 990 ideas. Now, how many of those would have matriculated up to be voted on? As you can see, there's a thumbs up and a thumbs down in the upper right-hand corner for people to select. Hey, that is a great idea. We should advance on that in some capacity. Or that is a terrible idea, and you can understand why that our organization has looked at. Now, we've generated 990 ideas that we know wouldn't have necessarily matriculated up in our organization. That doesn't mean that we've implemented 990 ideas, because it gets into that management side as to what is your process going to be. Because you don't want to just open up a platform and not respond to them. That's not the types of innovation that you're looking for within your organization. Put a process in place to say, that's a great idea, it's got support from the crowd, and we're going to implement it because of these reasons. Or we're going to decline it for these reasons. Or it's in process because it's part of our digital strategy. It's part of a greater initiative that we're working on right now. And you can also see that we have a dashboard to identify different key metrics as we're looking for participation. Second one that I talked about is the framework. How do you innovate in your organization? Again, I said you don't just walk into a meeting and innovate and start happening from an employee's perspective. At the beginning of the session today, you talked about lack of innovation at your managers and employees level. 41% said that was the biggest issue. We'll come up with a framework so that you can begin the conversation. This is the one that we've used. It's called the 10 types of innovation, and it talks specifically about innovating across your business model, and has been a fantastic read for our people that have got their hands on it in the organization to begin to inject these into your conversations. And it hits on 3 key points. It talks innovating on an internal structure basis, innovating your products and services, and then finally innovating around your customer experience. And we know that that digital customer experience is going to be critical for the future. And the last one is to provide some innovation management around this. How are you going to look at this? As ideas matriculate up, how are you going to put some ROI decisions behind these? How are you going to take a look at your digital strategy to determine what's the proper venue to move forward in from a prioritization perspective? And Gartner provides a great example of how to take a look at it from 5 different levels of maturity. Understand where your organization is at, and then start to build so that you can get to that final level 5 of a pervasive, innovative type of organization in the future. Just a couple of challenges that we've hit on. Comfort with the status quo. Status quo, I think, in our industry and in your industry, is relevant. It's out there. It exists right now. You have to take a look at your organization and say, how do we inject a little bit of discomfort, and a fear of failure within your organization. Too many strong silos, adherence to legacy processes. Boy, do we have people that will hold on to certain processes with their cold, dead hands. Lack of thought diversity. Inject new people into the decision-making process, and you will find that your ideas will foster greater and faster than they do currently today. If you surround yourself with only the same like-minded people, you're going to walk out of a meeting and you're going to feel really good, but you're not going to advance the ball far enough and fast enough that you need to. And then the lack of customer focus and putting it into your culture. All right, panel. First question that I have, and Eric, I want to start with you as a CEO. So with all of the conversation related around innovation and disruption, how are you starting to inject innovation within your organization?
Well, thanks, Ross, and thanks for the opportunity to be here. I would tell you that our journey at the Bank of North Dakota is very similar to Eide's. Several years ago, we recognized that we need to be more innovative. By the nature of the bank, we need to be innovative. Our job is to finance economic development throughout the state of North Dakota. So we need to be innovative. And we recognized early on that our managers weren't necessarily with us. And so we decided that we had to build a culture of innovation at B&D. And that really started with 4 different pillars. So very similar to your journey. Our pillars were around coaching as a management philosophy, bringing our people in on a one-by-one visit with their manager every week to understand what their issues are. Second, curiosity. I think you brought that up earlier. Are you curious about your job? Are you curious about what's happening in the industry? Third is collaborative types of efforts, sitting down with one another, peer to peer. And fourth is really empowering them to act upon the things that they've discovered. It's interesting that we have come up with some of the same ideas that you do. In fact, we have what's called an idea box. And so all our employees, through this cultural shift, and it's important to recognize that when we talk about a cultural shift, that it's foundational, that it's not, leadership read a new book of the month and it's, who moved my cheese. This is foundational. This is permanent, something that we want to work towards. So the idea box is one of those things where all of our employees have an opportunity to bring forward ideas and they get acted upon. The other thing that we thought was critical in this was looking at our physical space. Does this foster innovation? Are we collaborative? Are we innovative? And so we put together a team called the Innovation Team, and they are looking at all of our spaces. So are we can we take down the Hobby Lobby art and start decorating the bank in a way that helps us foster, collaboration or innovation. So those are a few of the things that we've done at the bank.
I need to step back and apologize to our panel for a second. I was so excited after talking about innovation there for 5 or 6 slides. I jumped right across having them talk about a little bit more on their companies. Most of you probably know some of the company or that we've already talked about with Eric and Ron being on here as well too, but I know with our audience, I want to take just a second and have you each talk a little bit about your background and your company here really quick. So Ron, let's start with you on Wall Street Blockchain Alliance.
Sure, absolutely. So I'm privileged to serve as chairman of the board of the Wall Street Blockchain Alliance, which is a nonprofit trade association, as you may have heard earlier, really with a mission to guide and promote comprehensive adoption of blockchain and crypto assets through global markets. I come out of a financial markets and financial technology background, starting in banking. I spent a pretty significant amount of time at a company called Thomson Reuters, where I was head of exchange trading for many years, as well as what we called head of global analytics, kind of the boring plumbing that keeps Wall Street running. Post my time at Thomson Reuters, I was privileged to serve as chief executive officer of a company called Derivatrust that was in the swaps market particularly. I've been in the blockchain and crypto space since 2012, which kind of makes me, when I talk to the cryptos, the gray hair in the room, which is kind of weird. But the day-to-day for us now really is guiding and promoting, educating, and really helping the cultural shift that you've been referencing across multiple industry verticals.
And we did clarify you are not Satoshi Nakamoto.
I am not Satoshi Nakamoto.
Okay.
I
All right.
don't even care who that person is anymore. Please don't ask.
Okay. Thank you, Ron. Glad to have you on the panel today. Eric, Bank of North Dakota.
Sure. We have the distinction of being the only state-owned bank in the nation. So some of you from outside of North Dakota are wondering if you heard that right. Yes, we are owned by the state of North Dakota. I am a state employee. We've been around for 100 years. Our job in the Bank of North Dakota is to finance economic development for the state of North Dakota, and secondly, to act as a banker's bank. So you could think of the bank as a Federal Home Loan Bank, for example, or the Federal Reserve, a mini Federal Reserve. Those are the types of institutions you could compare us to.
Great. Thank you. And again, glad to have you on the panel. John, Kasasa.
Yeah, I'm John, and we started, Kasasa was back in 2003. We started as a company called Bankview. You may be familiar with it. We work with about 800 community banks and credit unions around the United States. What we do is we develop retail products and services that attract consumers and motivate consumers to adopt banking behaviors that are profitable, good for you, reward those consumers in some way. Currently, we work with, like I said, with about 800 institutions and have millions of consumers around the United States actively using our checking accounts, savings accounts. Also, we launched a new type of loan product a couple of months ago, and a variety of other financial tools.
So John, let's kick off that first question that Eric started with and talking about what they have with a collaboration tool and different environment within the Bank of North Dakota. How is your company innovating in this space from a financial institutions and fintech space?
Probably our company is quite a bit different, I would guess, than most of the companies here. In 2003, when we started, we were obviously a startup and a fintech startup at the time, which is, our first bent was innovation. We created what is today often deemed in the industry a reward checking account. It was the first time in this industry that it existed where a consumer could do a certain number of transactions using their debit card, maybe take an e-statement, and you would reward them with a high rate, 2 or 3%, 4% in today's market, on a free checking account. Prior to us, that did not exist. And so when we started in 2003, we were very much an innovation company, and that was it. We didn't have the operational tendencies that bigger companies have. So we had to kind of grow into learning how to be adults. And as that adulthood kind of took off, what we learned was we were almost leaving our innovation roots in the dust and focusing more on how do we turn this crank faster, as opposed to what's the next thing that consumers are going to need. So around 2007, we embarked on what has since been a very regular effort, spending millions of dollars a year researching consumers, both through proprietary means, primary research as well as secondary research. But that 2007 really kicked off a commitment from our organization from the top down in innovation and investing in innovation. Certainly it's a discipline, but it's also an investment. It's something that that needs to have ROI. It's something that needs to have a dollar sign in front of it and probably commas involved. And it's very common that people say innovation also needs to have failure. Certainly there's failure in innovation. We've had some fairly public ones. Unfortunately, I think we're getting a lot better at it. But innovation as well should have a return for the company and for the shareholders as well as for the consumers that you impact. So the way we think of it as just a normal part of our business, and we have it segmented these days so that it doesn't impact our existing sort of ongoing business. So for instance, I oversee the product management organization, and tangentially I also oversee what we call our incubation side of our business, which is industry, or rather products that our market doesn't know that we offer. Typically, we're working in beta at this time with institutions. So for instance, right now we have a mortgage product in market with a few institutions. We have other sort of interesting beta products that are going on. That's all in incubation mode. And until incubation can prove that it meets certain criteria, based upon, like as I mentioned, revenue, based upon industry need, consumer need, and all sorts of other metrics set by that incubation fund, then it can move into the transition form of our business. And that transition sort of team is a dedicated team that is bent on making that product work inside of our existing organization. Most organizations are already machines. They're already, hell-bent to not have change because they are made to manufacture things, whether that's, hey, people need to come in or they need to sign forms, and whatever the situation is, they're rightfully kind of push out change. And so what we found, and it's since been written about in a really wonderful book, I think came out about a year ago, called Zone to Win by Jeffrey Moore. Really phenomenal book. But what we have a very similar structure where there's this transformation team, which essentially takes that innovation and makes it a usable part inside of our factory, and then we roll it out to our client base. And that's a long answer, but that's essentially the way that we look at it.
Great. Ron, from your background, obviously you've got some entrepreneurial and innovative aspects to your background, and getting into the blockchain space very early. What has the Wall Street Blockchain Alliance learned, and how are you starting to work with community banks and starting up a blockchain effort? What would be your kind of innovative experience of helping the people and the participants in the audience begin this journey?
Sure, and it's always an interesting conversation when you head up a nonprofit trade association. So many of our members come to us and ask those fundamental questions that you raised. How do you seed innovation within an organization? And I always hit on a couple of fundamental frameworks. One is we often talk about innovation, and you said it earlier, top down, which is absolutely right. But for us, it's top down and bottom up. That virtuous circle of understanding what innovation means. And I always go to the phrase, keep reviewing how you do what you do. Keep going through that cycle of understanding the business model, the business you're in, the business lines you're in, how to insert people within those different business lines. And you have to do that on the framework, and we do it within the WSBA itself, the framework of education and continual learning. This space, and my colleagues on the panel know that so much of this moves so fast that we work with our members and we work internally to create that framework of continual learning, let them fail, let some projects fail, but learn from that over time. And one of the things we often see, a lot of our members are large banks, large organizations, but a not insubstantial portion, almost 40%, are small, nimble firms, or some community banks, or small, nimble accounting practices. And really, we work with them to create that culture and let them get their hands dirty. Put a thought leader on it. Let someone play around with the technology. Let someone play in a sandbox that won't blow things up, but will certainly give you and your firm and the management the opportunity to see what they see, because you can't innovate unless you begin to have that continuous learning, and what I would argue is that continuous ability to push that envelope for yourself. If not, you get caught up in the cycle of, and I've heard it hundreds of times, this is how we do it, Ron. It won't be.
Right.
And you have to be part of that.
Yep. Yep. Eric, so we started out with how you're doing it today. What are the challenges that you find from innovating within the Bank of North Dakota as you talk to other bank presidents and bank personnel? What are the challenges that financial institutions have in innovating today? And, I think Shane mentioned earlier, clearly innovation is, even in the governmental agencies, being recognized and trying to push regulations. And I know that was one of the comments earlier, but from your experience, what are the challenges today that exist on innovating?
Yeah, well, there's many. I think one of the major ones that we continue to see is change is happening so rapidly, so frequently. It's continuous, and at some point our employees rise up and say, there's only so much of this we can handle. So you have a little bit of change fatigue. Is always an issue that we hear. Secondly is that things have been going pretty well at the Bank of North Dakota. We've been 15 years of record profits. Assets are about $7 billion. And the employees wonder, why do we need to change? Things are good. The status quo is fine. Why do we need to continue? And I think the other thing that we hear quite frequently is uncertainty. Blockchain is one of those. What's coming at us next? Where do we pivot to? There's so many things that we can be looking at. We have a budget of X. How do we make sure that we spend in the right ways? So those are, probably 2 or 3 of the major roadblocks.
That's very similar to what we found as well, too, is that you need to foster an environment of change. And the biggest thing that I've learned in these last 364 days is that I think, what you need to create is help people understand what the change is. If they can see the change, they're more willing and able to act upon the change. But if they can't see the change, they're never going to change. So, John, coming from your perspective, from a fintech side of the equation, how are you seeing community banks that are struggling with, fintechs, but also, just the adoption of change and the innovation that is impacting their businesses?
I get the privilege of interacting with community banks on a daily basis, and of course, going to these gatherings regularly. It's kind of a loaded question that you ask, to be quite frank. And the reason is, and I'll talk more about this, I guess, in my session in a couple of hours. But financial services is a risk-averse industry. That is the very nature of this industry, is to be risk-averse, and innovation and change in and of itself is risky. The question that I find some really interesting community banking leaders kind of raising is, what's more risky, doing the thing we've always done in an era of disruption, or trying something new to go after the target that we know we want our bank to grow with? And I think community banking leaders are coming to that realization. I hope it's not too late. They're coming to the realization that, I need to go where people have already moved, where the industry, where consumers, where businesses have already decided they are going, and not try to sit in this world of they'll come to their senses and stop adopting these technologies or stop doing these things that perhaps maybe the ways we've done it in the past. And so that means it cuts across essentially 18, 25 different segments of the way that banking works today, whether it's marketing and the changes in marketing itself, fundamental changes, all the way through to regulation. And to Ron's point earlier, education, coming to these sessions, learning, maybe kicking the people out of your bank who aren't normally in these sessions and saying, go to that Eide thing. You need to sit there and experience this stuff. has been very successful for community banks, to just get them to adjust and learn that, this is not Ron and Eric and John and Ross looking in crystal balls and saying, oh my goodness, this world is going to be different 5 years from now. This world has changed. Banking world has changed under our feet over 5-6 years ago. And it's community banks that are now at the very tail end of this. And if we don't adjust quickly, there's some real challenges.
Ron, along the same lines from your perspective, correlating it to blockchain. So what is the difference in, that challenge within the community banks or the other banks that haven't done anything in blockchain versus the ones that have? What do you see? Is it more of they have that innovative culture already built in? It drives from some opportunity, proof of concept that they've been able to correlate it, or do they have deeper pockets and can be a little bit more risk averse?
Yeah, there's the argument to be made that large organizations have the deeper pockets, but I'll be very candid about it. The largest banks and those who have spent money on blockchain technology looked at it as cost savings. That was the initial, holy cow, we can reconcile things quicker, we can eliminate errors, we can eliminate human reconciliations. So it started as that cost savings conversation for global money center banks. I would argue it wasn't initially based on innovation. I don't think the CEOs of some of these larger banks were sitting back there and saying, blockchain really is a great platform for us to become an innovative, have an innovative culture within our organization. But it's percolated into that. It's percolated into, again, the conversation about how they do what they do, why they do it, how do they motivate that next generation of employees, how do they seed and germinate the ideas around the next business models for banks. And I would actually argue, and we do this in the accounting space, we do this in the legal space, the big concern that a lot of the bigger players have, putting aside that they've got bigger budgets to play around with some of this, is this overhang of legacy technology that they sit on. Hundreds of millions and billions of dollars worth of spaghetti connected together, held together by Band-Aids. You and I were talking about this last night over dinner. I would argue that nimbler, smaller organizations, community banking writ large, has an opportunity to become its own ecosystem in a blockchain space. And of course, you've got vendor solutions and you've got legacy systems as well, absolutely not diminishing that whatsoever. But the opportunity to play in a sandbox of your own choosing, working with the vendors that you've got now, to me is core to that strategic roadmap in the future. It's core to how you'll motivate employees within your organizations. What do you tell the 20-something-year-old about their future in the organization? I've told this to 20-something-year-old accountants. The auditors aren't going away. They'll evolve. Bankers aren't going away. I really am, I'm heartened by the conversation about community banking because I think this is a generational opportunity for community banks to evolve into a more important relationship across the ecosystem. And I think blockchain is part of that transformation.
Ron, I apologize. Can I say
jump
something?
in.
I think you're right. This is a strong opportunity, but, and maybe not but, maybe it's an and. Where community banks need to adjust and put their resources is into understanding their data. It's astounding to me how many community banks, it is definitely been understood probably by most people in this room that most community banks do not know to the penny or even to the dollar or even to the $10 what it takes to acquire a new checking account. How much money does it cost you? Oh, I had a vendor one time tell me it was $700. Oh, I had a vendor one time tell me it was $40. And the spaghetti is certainly one of the reasons why it's really difficult for community banks to track that, right? Also, perhaps community banks have relied on billboards for advertising for too long instead of digital technologies that allow you to help track that stuff. But the other issue from a data perspective is so many community banks still don't know that they actually lose more customers in a given month than they gain. They're bleeding customers. Oh, I've had the biggest lending year, coming off of the biggest lending year I've ever seen, right, in the last 20 years. Cool, good for you. But you're bleeding customers and you're bleeding deposits, and deposits are going to, other sources. And, Ron Shevlin loves to call them deposit motels, essentially. Community banks are deposit motels. And it's a little bit of a kick in the chin or kick in the teeth for community banks, but it should also be a wake-up call that we need to understand, we need to map our data so we understand exactly where our, what's happening in our banks. We understand. I had a banker tell me the other day, if the small business that we lend money to last week knew less about running their business than we know about running our bank, we wouldn't have given him a dime. And he was joking, but there's some truth to that understanding your data and what your consumers are doing and what your businesses are doing and where they are and how they're interacting is the very first step to even taking advantage of something like blockchain or even taking advantage of intelligent marketing. So that's the first step, right? Is getting the data from your systems and starting to make sense of it all through building a data warehouse and using data science effectively.
Eric, how do organizations start that, to cross this shaky bridge in this digital business transformation? By taking, clearly we have legacy customers that have been with the bank for a long time, have, probably on average, greater deposits than a younger generation. They still like to come and meet with people in the bank, where the younger generation that is, accumulating wealth will probably maybe never even step foot in a bank. And then you've got the in-betweeners that are beginning that digital footprint. You kind of have three different multi-channels of how you have to operate today. How do you balance that out as a CEO of a community bank today?
Yeah, I think the point that was made earlier is exactly spot on in terms of data. For us, that's one of our big initiatives, is understanding the data that we have, understanding the systems that we have. There's redundancy in systems, and it's optimizing those systems. And I think we spend a lot of time and energy trying to figure out, what do we all have here? We don't know what we don't know. And so it's really, as we've talked about, understanding the data, dumping all of this into a data lake or a data hub, and from that, trying to understand and connect dots in terms of what do our customers want, what do they need, what can we offer. So, this digital divide that you talk about is an extremely interesting question in terms of, how do you work with each customer cohort, and I think it's specific to each group.
Let's go to this slide for a second here. If you can click over. Ron mentioned this earlier, this Gartner hype cycle, and I'm sure many of you have seen this. I attended a Gartner conference here a couple weeks ago, and it was fantastic in regards to their position on, taking a look at the IT infrastructure of where organizations are at and how these, disruptive technologies are moving and advancing. And this Gartner hype cycle, breaks it down into, the innovation trigger, the peak of inflated expectations, the trough of disillusionment, and then you get into the slope of enlightenment and the plateau of productivity. And I found this slide particularly interesting to me, is that on the trough of disillusionment, slope of enlightenment, plateau of productivity, there's a whole bunch of digital business, digital banking transformations that have a blue dot that mean that they're less than 2 years from really being into those mainstream areas. Now, Ron, the one on here is blockchain. It's on that, it's coming down from the peak of inflated expectations. Also, one of the sessions that I listened to was the IBM CEO, Ginny Rometty, who was fantastic. And she challenged that, Gartner sees this as still 5 years out from being mainstream. Her position is that she believes blockchain will be mainstream within 2 years. Little bit, kind of at the back end, reaffirm what your position is. And I also think the Walmart example is very relevant. And one thing I wanted to mention to you is, you probably have customers within your banking footprint that have a produce that ends up on the Walmart shelf somewhere. So you have to start thinking, how are they starting to adopt to these requirements that are happening from a Walmart perspective? So your thoughts on timeline? I know Pete already asked this one. I was going to give him a little shot to the ribs later on for asking it preloaded, but I wanted to for sure bring this up and then just get your perspective a little bit more on that.
Sure. Far be it for me to disagree slightly with Gartner, but I'm in the Ginny Rometty camp of blockchain innovation, and it might be a self-serving comment because I'm so deeply involved in this, and our organization is across so many different industry verticals. That said, I think there are some industry verticals that will be a slower adoption than others for a variety of reasons, but I think specifically banking, I think specifically payment processing, we're 2 years away from how payments are processed globally being fundamentally upended in many regards, leveraging blockchain technology. As you look at the longer range roadmap, you begin to ask yourself, once you see the validity of the blockchain use case in production, and everyone uses that phrase, right? I get this question all the time. Ron, when's it going in production? I'll point the guy out at Walmart. You can call him. Some of this stuff's in production now. I think when we begin to look at the more comprehensive, longer timelines, that's when blockchain's embedded in the day-to-day activity of life. There are browsers right now that leverage blockchain technology. So how your family and your children, you will engage social media and internet browsing, how you will pay things, how you will pay your car. That may take a bit longer than the 2 years, but this is not a 20-year conversation. I've mentioned in the earlier presentation, I have a 13, she might be 14 now, yikes, 14-year-old niece. Her world will be fundamentally different from an engagement perspective than the world you and I know. And blockchain is going to be part of that.
No. We go back to the slide for just a second. Eric, I have a question for you. So on the innovation trigger on the left-hand side as it's going up, there's this item called things as customers. What are those things?
You got me.
I don't know either, but maybe my refrigerator in the future will be a customer of the Bank of North Dakota.
I think it's interconnected
I
devices.
think it's IoT
and
devices as
yeah,
well.
and think about that from the banking perspective. How happy would bankers be if a smart contract or a system, if my car is paying my car mortgage, my car loan, to you directly?
Right.
That's a positive for bankers broadly. And think about the unleashing of the extra capital being able to do that. Think about the loyalty and rewards. Think about that engagement for your clients. To me, that IoT model is not just a robot paying for something. It's my car, my phone, my home is going to be interacting directly with my bank.
Well, just yesterday, I was telling you that during the break, is that we met with an individual who's got a blockchain company who has solutions for bankers. And he's got a proof of concept contract for us to take a look at. But you know, there's a number of issues that already would have value for bankers. And one of them was what he calls a digital cashier's check. When he looks at our business model, which is heavily into student loans, and you know, students are transient, they move all over the place, they're across the globe. He said, wouldn't this be interesting to have a solution that really reduces the friction, you know, in the payment space? ALM, know your customer, all these things, smart contracts. So, yeah, we see the revolution coming.
Yeah, and it's that
was
comment.
just yesterday. You said
Yesterday.
That's how recent it was.
Yeah, and it's that comment, and I had discussed it a bit earlier. Community bankers, community banking broadly, like all of us, will be hyper-local and hyper-global because of those platforms.
John, last night at dinner, you were talking about a recent innovation that Kasasa has come up with that I thought was very interesting, and wanted you to talk about, one, that process of coming up with the idea, but also what the idea is as well, too.
Sure. So, you know, the hype cycle thing, I always kind of roll my eyes at those charts, and it's not because Gartner isn't a well-known sales team. It's because I believe that it focuses more on the technology itself and not the product that the consumer will use or that the end consumer, you know. So blockchain, for instance, is a great example. There's a lot of use cases, to your point, Eric, on how you could use blockchain to actually accomplish something that a consumer would use. It's not necessarily going to show up on that chart, but it will be something that's actually in use. The loan that we created came from consumer need, really simply. You know, we were talking to consumers, and we found out that your good borrowers are, when it comes to like term loan, think auto loan, mortgage, something like that. They often are told, man, get out of debt as fast as possible. Pay as much money towards that loan each month that you can afford. So if your auto loan is $250 a month, pay $300 if you can afford $300. And they're told that by Susie Orman and everybody, that this is the way to get out of debt as quickly as possible and be a financial steward for your family. The challenge, though, is that consumers know that if I write you a check for $300 or I make that payment, which is, majority, all the money I can afford, but something happens tomorrow, life happens, my kid comes home and breaks his arm or whatever, I can't get that money back from you very easily. So our loan is, the Kasasa loan allows the consumer to take the money over and above the minimum payment amount, allows them to take that money back at any time penalty-free. And it's, we created for auto and personal loans, and we rolled that out in June. And as I mentioned, we have the mortgage and student loans in beta now with live consumers and institutions. And the feedback from regulators has been amazing because it's a very transparent loan. It all works through your mobile phone, so you can easily control the take-back amount. You can see where your disbursements are going, or rather, in this case, where interest and principal lie. And it addresses the real consumer need. And that's really where we start when it comes to innovation, which is talking to consumers or small businesses or whoever you're in, whoever your target market is, and figuring out what is the real challenge here. Otherwise, you've got slap. Otherwise, you've got a solution looking for a problem. And so if you are curious and you want to check out the loan I just talked about, you can download it in the App Store, choose your flavor, whether it's iTunes or Android, and download the Kasasa app. The username is Preso, Preso, and the password is demo, DEMO. That's an example of a product. Took us about maybe 5 years in development, which was exceptionally fast given the regulatory hurdles and a bunch of other hurdles. We had to create our own core in order to do this because cores just can't do what I just told you to do. So there's technology work behind the scenes. There's regulatory work, obviously. There's product work. There's the UI and UX work. And as I mentioned, mortgage is still being worked on from the secondary market perspective and others. So, some innovations have different sort of time horizons. Some we have incremental innovations that roll out pretty quickly. They take us a few months, and those are typically product line driven. And then there's others like this loan, which are fundamentally very different industry sort of ground shaking things. And those can take quite a long time and 20 million plus to build. They're not cheap, but we believe what we've done is created the most consumer-friendly loan on the planet as a result.
Very good. Gary, I'm going to pause here for a second, and I know we'd opened it up for audience questions as well too, and want to inject that for the first time. Do we have any questions from the audience that have come in on text messaging or from any of the satellites?
I think that one of the items that came in a little bit earlier about talent and also talking about questions, if you were a young manager in a community bank, how can you convince that management team or that board that does not want to take risk be more innovative?
Data.
Data?
That's the only way you win an argument with a banker.
I agree. I do agree.
Wow.
And there are a lot of different opportunities. Eric, have you injected any kind of business intelligence solutions into the bank so far to help you migrate from that data lake, that data warehouse so far?
Well, that's actually the next step on our journey, is to understand the information, whether it's data scientists, data analytics, data governance. Those are all things that we're working on, but I absolutely agree. It's having data and having your facts.
Yeah. One of the questions that I have for the panel here relates very much around this, and we've been talking about this within Eide as well too, is it's digital literacy. So as we talk about digital business transformation, this isn't a problem that banks and accounting firms and organizations can hire their way out of. There isn't enough talent, and we're all going to be fighting for them. We also need to raise the digital literacy and digital IQ of our current employees as well too. And so, I want to pose the question related around similar to that, is that how in an organization, do you see raising the digital literacy in this digital transformation? And John, let's start with you.
So, I don't know. I don't take the stance that everyone can get there. And this isn't necessarily my company's stance, so don't hold Kasasa accountable for what I'm going to say. But I love the fact that community banks and organizations in general, especially smaller organizations, really want to kind of train everybody to get where we're going. I can appreciate that. But I do believe that many institutions will have to make some tough decisions about, who are the people that, what's the level of expertise that we're going to need? Not necessarily who are the people, but what is the level of expertise that we're going to need in certain areas for the bank of the future and the bank of today. And that may require, because budgets are not infinite, it may require changing people out and really taking a hard look, change management style approach. But what that also requires is perhaps shifting board members. There's a lot of power on your board, and to the degree that there is the potential to make swaps. Either I've heard older board members kind of passing along the torch to maybe their kids or what have you, or if it's a family-owned bank, or I've heard of a variety of different techniques that community banks have done. But really, some of the most intense change that needs to happen is from the support that happens at the executive level by way of the board. And so, these are real discussions that community banks are having today with their boards to say, does anybody in here really have technology experience? No, I ran a car dealership, or I did, this or whatever. And it's not a fun discussion to have, but it's one that if I assume everyone there is is driven by profit. No offense, but. You probably are, right?
As a nonprofit trade association, I'm a little hurt by that.
Okay, well, there you go. All right, I offended at least one person in the room, and my job is done. Having those discussions about, what are we going to do to send people to, are we going to have curriculum sort of, hey, if you attend this MBA class, if you attend these classes, we're going to reimburse you after you stay for 3 years. Are we going to shift some people around? Are we going to make some changes at the board to make sure that we have real technologists who understand the world that we're endeavoring into? These are all sort of big discussions that need to be happening right now inside of your institutions.
Eric, how about you at the Bank of North Dakota? How are you
And by the way, I know it's so easy for me to say this kind of stuff because I don't work at your bank, so I do understand how I don't want to minimize how hard it is for me to, how hard it is for you guys to execute on what I'm suggesting.
Eric, how about you?
Well, I think along the same lines, it's really taking stock of the skill sets that you have at your organization, where you're going to be. This coaching philosophy that we have really enables us to drill down in terms of understanding, a person's abilities, and from that you build a network of skill sets, and I think eventually you get there. And there are people that rise to the occasion, and when you know what your gaps are, you train, vigorously to fill those gaps, and if you can't, you go out and fill those. And what we have found is that, there are a number of our employees who are just extremely uncomfortable with change and the pace of change, and eventually what happens is, they weed themselves out, or we weed them out.
Yep. Any mechanism that you've used to take the stock to identify where people are at on that digital literacy curve?
Well, we have personal development plans, and we train accordingly.
Yep. Ron, the WSBA, obviously this is digital literacy is a big
Sure.
area from a trade association, and I know you've talked about the passion that you have in helping kids, but also institutions, so clearly you're seeing this as something that organizations need to get their arms around as well too. Any advice that you have, whether it's from the WSBA or what you're also finding banks looking at?
Sure. So, and to address some of the the previous comments as well, for the years I've been involved, and the WSBA has been involved in crypto assets and more broadly blockchain technology, and despite all the investment by large banks and large institutions, there's still a shortage of technological and product and business expertise in every vertical that we speak to. And one of the really dear to me particularly, bits of advice that we give all of our members, and certainly from the perspective of community banks, I strongly encourage it. Set up learning internally. And I know many of you have that, and I understand, but make it a requirement to learn on a regular basis, because the truth of the matter is you cannot buy your way into the resource to do this. You're going to have to train up people, and again, not just at that technology level, but at that business and strategy and product level. And we also kind of wrap that up a bit with this really important conversation that scares some people depending on what industry vertical, but I think is a real opportunity, particularly as you work to coach and learn younger people and over the next generations. The competitive landscape itself is changing. Banks, community banks, large banks, small banks, your competitors are not just each other. Apple is one of your biggest competitors. Google is one of your biggest competitors. You want to motivate your younger working group and your younger population? Tell them that they're going to be strategically working to keep you competitive in a world of Google and Facebook and Apple. And they buy that every time. Every time. They want to learn because of that.
All right, we are at the 13-minute mark here, so I want to start to prepare you. Our plan is to, the last 10 minutes, to really kind of open it up to the floor to ask some questions of this group as well, too. So I'm going to take the last 3 minutes, and we're going to go a little bit of rapid fire here, okay? So short answers if you can at best, and if you get really long-winded, I'm just going to cut you off, all right? So, okay, Ron, first question. Last 6 months, we've seen Bitcoin have less volatility than the U.S. stock market. Does that give it credibility and make it more valid from an asset perspective?
No. Institutional engagement is what gives it more credibility.
Okay. John, how should community banks approach fintech companies, as partner or foe?
Both.
Okay. I don't have that many questions for rapid fire, so, okay. Eric, how does management, how does leadership, bank presidents get their arms around innovation?
Yeah, it's surrounding yourself with people who have a like interest. It's being curious. It's going out to educational opportunities, and reading and research. It's hard work. You got to do it.
Creating awareness. I like it. Okay, Ron, back to you. You had a slide on consensus and smart contracts. This is I know this isn't a rapid fire answer, but hey, what the heck? How do different organizations come to consensus on a private blockchain? How is that going to happen?
Wow. There's no rapid answer to that at all, Ross.
No,
Thanks.
That's why it's a good question at the end of the session.
Wow. Okay, so what I would argue is it depends on what you're trying to accomplish and the structure of that private blockchain in particular, and who administers it, right? And again, they're the same questions you'd ask if you were setting up an internal network. Who's in, why, what do they do, what's their function, who administers this? And so smart contract engagement, a smart contract will only ever be as smart as the knowledge put behind it to write it.
Yep. John, in digital business transformation, that change, how is it different how banks are approaching it and how fintech is approaching this digital space? You talked earlier about customers. Does it really come back to the customer, what the customer's needs are, or are there different approaches that you're seeing as well too?
I'm going to touch on this in my session in a couple hours, but actually I'll talk more about it. But fundamentally, I think on the surface, it definitely can come across like, oh, fintechs are consumer friendly and banks are, dinosaurs and they suck, and you've heard all the stories. The reality, though, I believe, is actually quite a bit deeper. It just comes down to efficiency. Fintech companies today are built digital first. Banks have been built bricks and mortar first. And whether, regardless of your bent for branches or bricks and mortar or humans, the reality is that you don't have to pay ones and zeros nearly as much as you have to pay people and pay for insurance. And that is the fundamental difference.
Eric, last question, and we'll start to pull from the audience, but in your perspective, where does innovation and disruption and disintermediation fall on the list of CEO priorities?
Well, significantly, as you know, we talk about blockchain, and we talk about blockchain as, you know, the great equalizer and getting rid of, you know, intermediaries. You know, it's one of those things that we look at and wonder, are we going to be relevant? Do we continue to be relevant? So, you know, it's a industry, it's a software, it's something that I think we all need to explore if we want to continue to be, you know, part of this changing industry. And it's one thing that we've certainly talked about at the bank is how do we continue to be relevant? We have, you know, customers out here that are expecting that we have the latest in technology. So we have to be.
All right, ladies and gentlemen, we have 9 minutes left here, and I know I can't see you, but I know most of you in the audience, so I want to see us start asking this diverse panel of innovation personnel that we have, and if I don't hear from anybody, I'm just going to start throwing out names and having you come up with a question on the cuff, okay?
Please don't let him go through
we've
another
got
lightning
microphones
round.
around the room, and let's see what we can ask of our panel here today. Anything that's come in on Paul, on the text messaging? Okay.
Not a whole lot.
All right, who has the first question for the panel?
Again, please don't let Ross make the next question because we just can't answer fast
I have a
enough.
couple more, but
So Ross, I think there's one that
Yes.
came in that I'll try to get to it. It says, what's an example of how to self-innovate in addition to creating innovative products?
how to self-innovate
In addition to
creating innovative products.
Yes.
John, you want to
Don't
kick
you
that one
dare.
Thank you.
I don't know. I think what I would presume the question means is how do you almost, you know, reestablish your company's philosophy moving into the future, as opposed to maybe just focusing on what we're going to give a consumer, but also, you know, there's this holistic concern about, you know, who is our market? The number of community banks who will tell me, oh, we serve everybody. Yeah, that's not a target. That's cool that you serve everybody. That's a good thing. But who is your target? Who is your market? Who are you really focusing on? Oh, we're focusing on Gen Y. Do you understand that Nielsen, you know, Nielsen bought Prism, right? Nielsen are those set-top boxes that we used to monitor our TV. Nielsen bought Prism, and Prism has like 76 different segments of Americans. 76. And about 25 of those are some flavor of Gen Y or millennials. So, you know, we're not being precise enough on our targeting. And you can just start, I mean, think about every aspect of, you know, certainly I just focused on one little piece, which is who is our bank going to be when we grow up? Or, you know, what are they going to mean? You know, who are we going to target? But there's every aspect of banking needs to be re-identified or at least recommitted. You know, hey, we are going to focus on this segment of small business customers, and this is the way that we're going to deliver it. And I believe that informs all of the rest of your innovation, all of your, which products we're going to offer, you know, how we're going to look, how we're going to talk to the community, what our brand's going to be like. Are we going to offer branches or micro branches? Are we going to have IVRs? Are we going to have, you know, ITMs? Whatever the situation is, all of that is informed by first deciding who do we want to serve over the next 5 years? Who do we want to target? And that's kind of the very first question I would ask, and then your innovation goes from there.
You know, I would also answer to that on the self-innovation side. You know, it's back a little bit what I talked about earlier, is that pick up something different than you've read before. If you keep reading the same thing, if you read, I don't know if this is a magazine or anything, but if you read Banking Today every single day, that's great. Keep reading Banking Today, but throw something else into that mix as well too. Pick up a customer experience digital innovation book and just sit down and read it, going exactly, knowing your customers, knowing where the space is, and you'll learn something along those lines that will help you along that innovation curve as well too. And I really like that innovation framework that I talked about earlier. There's a products and services section in there that really can help you understand how to be innovating related around your products and services. What else do we have?
So here's another one. In regards to creating a culture of innovation, do you have an example of an innovation idea that failed in your bank or company, but which led to a better idea?
How about Ron or Eric?
So not running a bank, but running a nonprofit trade association, I can give you some examples that we've seen in other members. We've seen engagement with banks that are trying to engage Gen Y and the younger generation. And what I would argue is that those first user experiences were really ham-handed. Those failed. But as that began to evolve, and it's not necessarily just a blockchain conversation, but being willing to be uncomfortable and try again led to some of the ways we're seeing banks and non-bank entities offering financial services to younger generations. So if you haven't seen Acorns or Robinhood, or if you haven't seen some of these capabilities, that comes out of the learning experience of, we really were terrible at this before. What's a better way to do it? So that's the closest example we have that we've seen in the marketplace.
Eric, how about yourself in Bank of North Dakota?
Yeah, so we've experimented, several years ago now with developing our own student loan software. And we went down this path with a vendor that we co-developed it together. And I guess what we found is that, our view on what this should look like versus their view became completely different, where they had a national audience and we were more interested in serving ourselves and our customers. So it was a bit of a learning curve on developing software, knowing what it is that you want it to be and who you want it to be for. And we ultimately learned that, this software exists out there that you can purchase off the shelf somewhere, you can customize. And so it was we tried to be innovative, but realized that, there's a time and a place for us to do that.
Yep, good. Gary, we probably have time for one more question.
I think the question would be that I would have, so everyone that's in this room that's watching today, they went back to the bank tomorrow. We talked a lot about innovation. What's one thing that they can really jumpstart this process?
Sure, let's just go down the row.
What's the one thing, I'm sorry, Gary.
What's one thing that they can really help jumpstart the process of innovation in their organization?
I would start with, and we had to do this with my team at WSBA, what are you unhappy with? What can we do to help you learn something different about a particular market vertical? Everything that we've created from a learning platform and an innovation platform, even as a trade association, comes out of the discomfort of asking really fundamental questions about why we do what we do. And then you begin to get the perspective of, how do I point my team at the right things? How do I point them at blockchain learning? And some of it's uncomfortable for me. I've been doing the blockchain stuff for a long time. There are some things that I read that make me sit back and say, what the heck did I just read? But get used to that discomfort and ask that question internally, and that defines where you point them to, what resources to point them to. And again, this is a bit self-serving for me. We've built those kind of learning resources and publications or partner with publications that help drive some of that dialogue.
Eric?
Yeah, I think every organization needs to sit down, and have an honest conversation among leadership and employees on where they're at on the, innovation curve, and understand what the world looks like and how status quo doesn't cut it anymore. So I think it begins with an honest discussion about the importance of being relevant and knowing the world around you and moving towards.
John?
What was the question again?
It was, what's one thing they can take back to begin innovation journey in their organization?
I would suggest that the one thing you could take back, I definitely appreciate the conversation with the executive level, but why? Like, what is it that you want to do? I mean, I've heard a lot of community banks say, oh, we need to be innovative, we need to partner up with a fintech company, and like, really, is that your strategy? What's your strategy? And if the strategy is to reinvigorate yourself and find relevance with a certain base of consumers or whatever the deal is, that makes sense. But it's to focus on what your strategy is over the next 5 years and have that drive everything you do. I think it's really easy to get caught in this tailspin of there's 12,000 fintech companies out there and 7,000 of them are going to eat our lunch. And JP Morgan Chase is investing $10 billion a year, and so there's been $60 billion of investment in fintech in the first half of 2018, and all this stuff, and go, oh my goodness, you know. But it all just comes down to your strategy and you know where you want to be when you get out of this innovation cycle. So I'd say before you do anything, make sure that you know everybody's on board with where you're headed.
Well, I want to thank you for the opportunity to talk about the journey that we've taken over the last year at Eide Bailey. But now I'd also like to ask you to help me thank our panelists, Ron, Eric, and John, and a great conversation today.
Thank you, Ross, and to the panel. Thank you for that innovation discussion. I really do appreciate that. I want to thank all of our speakers today that are here. I hope you have some innovative ideas that you can take back to your bank. I'd also like to thank our speakers that are in our breakout sessions. We're about to move into our breakout sessions. We'll have Daryl Lingle, Shane Hussar, Tim LeClaire, Jill Schneider, Ann Roxwald, and Phil Traxler. And there will be many more out at our locations too. We will be live streaming our regulatory panel, which will start here in 10 minutes. And then John, who was up here earlier, will be live streaming as well. So those locations out there that wish to watch that or maybe do a live presentation as well, that is totally up to you. Again, you know, I just want to thank everyone for taking the time out of your busy schedule to come here today to be a part of this. I know we're taking a little bit of a chance talking about innovation, but we just think it's important in our journey as a firm. We think it's important. We love community banks. We love to work with you. We want you to be around for a long time. We do think you have to be innovative, and it is really important. Again, we will be having 2 breakout sessions. After that, we will have a reception afterwards. We hope you will stick with us and have some nice time to talk to each other after the seminar concludes today. So again, we're going to take a 10-minute break, and then we'll be back with our regulatory panel.